In the previous video, we went over Japanese candlesticks, what they are, how they're created. If you remember, we also did some OHLC values and we made some candlesticks, and we also went over some of the commonly appearing candlesticks in a candlestick chart. Now, students have a number of questions that they usually ask me, and I want to go over some frequently asked questions in this section. I'd like you to subscribe in the meanwhile so that every time there is a new video you will be notified immediately. So let's proceed. Let's just jump in. Opening price versus closing price. The most common question that people ask me is whether closing price of a candle is going to be the opening price of the next candle. So assuming that we have a single day, when the price closes, let's say at $50, is it going to open at $50 the next day in the morning? Well, the answer to that is that no, that's not exactly true. It may happen, but it doesn't always happen exactly this way. Now, the reason is that the opening price refers to the first price at which a trade is taken when the markets open. So the first trade, let's say if the first trade happens at $50, then that's what the price is going to be. If the first trade happens at $52, then the opening price is going to be 52. So assuming that price is closed at 50 one day earlier, but the next day they opened, the very first trade was at 52, there's going to be a small gap in between, and the opening and closing prices are not going to be the same. The closing price in the same way refers to the last price at which the last trade is executed when the markets close. Therefore, it follows that we want to ask the question, why is there a change? Why is there a difference between this? Markets have already closed. Well, the reason for this is that there is a time difference, right? There's an interval, and during this time interval there could be some kind of news event, there could be an earnings report, there could be a political event, anything could change the market sentiment, and then buyers and sellers could have a different idea of where the price is going to go. So because all these trades are taking place due to demand and supply and what market expectations are, we cannot really say if the closing price of today is going to be the opening price of tomorrow. Now, if there is a change, there might exist a gap, and this is called gap trading, but it's a little advanced for this course and this video, so we're not going to discuss it now. We will be going over gap trading a little later on once you understand the basics of technical analysis. The next question that people ask is, why do prices move up? So let's think that there is a group of people and all of them want to buy. They want to buy a particular stock. And now let's imagine that there's another larger group of people who also want to buy. And there's only one or a very few people who actually have or are holding on to the stock of a particular item that people want to buy. So naturally, when this person or these few people who, sellers who are holding onto the stock, see that there are so many buyers, they're naturally going to want to ask for a higher price. So when they ask for a higher price and there are more buyers in the market, someone is willing to pay a higher price, and so prices start to move upwards. So generally prices move upwards when there are more buyers than sellers. Now this is a layman explanation to this. There are a number of, if you go into the details, there's a lot more to this that's going on. But since this is a beginner level course and beginner level video, I don't want to go into all of the details right now because I don't want to confuse you. So similarly, why do prices move downwards? Well, let's assume that there is a group of people and they all want to sell, and there's another larger crowd of people who also want to sell, but there's only one or there are a few buyers in the market. So what happens is their prices tend to move downwards when there are more sellers than buyers. And I will be putting up another video where I will explain exactly how this process happens. The next one, what exactly is technical analysis, and can it be used on let's say cryptocurrencies or commodities, etc. So people have different questions, but basically what they want to know is, can technical analysis be used on, let's say, the US stock market, the British stock market, the Indian stock market? Can it be used on commodities and currencies? So basically technical analysis looks at the study of charts and price movements, and it can be used on anything. So the question whether you can use technical analysis on cryptocurrencies, the answer is yes. Technical analysis can be used on all kinds of candlestick charts and symbols. So once you know what technical analysis is, how do you use the support and resistance, how are the candlesticks, what are they representing, what are they trying to tell us, you can use it basically on any symbol anywhere around the world. It could be crypto, stock, currency, it could be any market. So long as there that particular symbol has OHLC data and you can create a candlestick chart, technical analysis can be used to give you the trade entry and exit positions on any market anywhere in the world. Bulls versus bears. So what happens when a bull is angry and it wants to strike? So if you look at the picture, you'll see that the bull usually pulls his head downwards, he has his horns, and he hits upwards, and that's why we say a bull market is going to push prices upwards, just like a bull strikes upwards. Similarly, bear market is a bear always strikes downwards with his paws. So bears strike downwards, they push prices downwards. We can also call this a bearish market. Moving forward, the next video may seem insignificant for those of you who already know how to trade, but for the purpose of this course, all the beginners who have no idea about charts, this is a very important video that I would really like you to watch. It's going to show the live price movements of the struggle between buyers and sellers. It's only going to take a very short time, but you will get a very clear picture of how prices move up and down.